What I have understood after watching numerous YouTube videos is if a country has a trade deficit, its currency can undergo depreciation, that is, it can lose its value. And if a country has a trade surplus, its currency can appreciate or increase in value. Why does this happen? What is the trade deficit? What is the trade surplus? What impact does it have on the currency? And why this impact is not seen on the American dollar and the Chinese yuan, and how the American and Chinese economies are interconnected, and the current trade war between the USA and the People's Republic of China can lead to a global economic meltdown of epic proportions is what we will discuss in today's video. So let's start with what is a trade deficit. A trade deficit means a country is importing more than it is exporting. To import goods, the country has to exchange its currency for foreign currency, usually exchange it for dollars, American dollars. Now, when the country is exchanging its currency for foreign currencies, this will increase the supply of its currency on the world market. Whenever the supply of something goes beyond its demand, its value falls. This happens for the currency as well. So if there is a trade deficit in a country, its currency will undergo depreciation. So let's look at a country like the United States of America. United States of America runs almost $1 trillion of a trade deficit, and this should put downward pressure on the American dollar. More dollars in global circulation means higher supply of dollars. More supply should mean lower value, so the American dollar should depreciate. However, this does not happen. Why does this not happen? Because the American dollar is the world's reserve currency, and many countries, central banks, and businesses hold American dollars as a safe asset. Around 60% of global currency reserves are in American dollars. This creates constant demand for American dollars even if the United States of America is running a deficit. Many countries like China, Japan, and many investors buy US Treasury Bonds, stocks, and real estate. To buy these, they need American dollars, which increases demand for American dollars. And over the years, it cannot be emphasized enough, the American dollar has been immensely trusted by everyone around the world because the United States of America has a huge, stable economy, strong institutions, and rule of law. Even during crises, investors have run toward the American dollar, which is popularly called in the investing community as a flight to safety. So, in theory, because America has such a big trade deficit with the world, almost $1 trillion American dollars, it should lead to weaker dollar, but in reality, financial flows into the US in the form of investments through buying treasury bonds, etc., offset the trade deficit. So the dollar does not drop much and sometimes even gets stronger. A simple analogy would be if somebody is spending a lot of money, much more than what he is making, he runs into a trade deficit. But if rich people keep lending him money and buying his stuff, his bank account stays full, so his credit score does not drop. In this analogy, America is that rich friend who's spending more than is making, and the credit score is the value of the American dollar. Let us look at the top 10 countries with the highest amount of US treasuries. Number 1, as of January 2025, is Japan with more than $1 trillion, 1.079 trillion American dollars. People's Republic of China is number 2 with 760.8 billion American dollars. United Kingdom is number 3 with 740.2 billion American dollars. Luxembourg is number 4 with 409.9 billion American dollars. Cayman Islands is number 5 with 404.5 billion American dollars. Belgium is number 6 with 377.7 billion American dollars. This is the value of US Treasury securities each of these countries is holding. Switzerland at number 7 with 350.8 billion American dollars worth of US Treasuries. Ireland at number 8 with 335.4 billion American dollars worth of US Treasuries. Canada at number 9 with 329.7 billion American dollars, and Taiwan is at number 10 with 301.1 billion American dollars in US Treasuries. Why is this important? Because a country like People's Republic of China can use the excess yuan it has, because China, remember, has a trade surplus with the world. Theoretically, having a trade surplus should increase the value of the local currency, that is the Chinese yuan. However, the Chinese yuan's value is kept low so that Chinese exports can remain competitive. And the way to do that is by using the yuan to buy American dollars. Let's explain this further. China has a trade surplus, okay? Because China definitely exports much more than it imports. So foreign buyers need Chinese yuan to pay for Chinese goods. This should create demand for the yuan, which does happen, which should cause the value of yuan to rise, that is appreciation in the value of yuan. But here is the twist. The Chinese government intervenes. The Chinese central bank often buys foreign currencies, especially American dollars, in the form of US Treasury Bonds to keep the yuan weaker, but not just to keep the yuan weaker, to also strengthen the American dollar. So the American economy and the Chinese economy is interlinked. America is enjoying the benefit of cheap goods imported from China, and China is buying American treasuries and stabilizing the value of the dollar. If America and China come to economic blows, then China can sell off all of its treasury bonds, and that can lead to America defaulting on its debt, which can lead to collapse of the global economy, the likes of which the world has never seen. It is too frightful to even contemplate. So now that the trade war is underway between America and the People's Republic of China, we have to watch this space and understand how this thing plays out, and hopefully calm will prevail and nothing too extreme will happen.